Hello. Hello. Guys, let me know if everything's fine. My voice, etc. Hi, what's up? Just let me know if my stream quality and my voice is perfectly fine. GM. Well, it's 9 p.m. for me right now, but yeah, good morning to you. Amazing. Well, just like usual, I'm gonna wait like a couple more minutes for people to join in, and then we can begin our stream as usual. I do not use volume profile on any other thing, but I've been learning it on crypto a little bit. So yeah, so just on crypto. So I kind of use it, and it's been just a few days since I started using it. I don't have a strategy or anything yet, but yeah, I just know a couple of few things about it. But usually, I don't use it on any other market. I can know it right away where the market can go just by looking at the naked chart. But in crypto, it's kind of complex because the problem with this stupid pair is that once it gets into consolidation, it never gets out of it. Like very, very extended consolidation. For example, if we take a look at the last consolidation that we have, see, it's from like almost 200 days. So it's kind of hard to navigate through the markets in consolidation. That's why it's kind of helpful in crypto charts. Like the thing with crypto is that it's very less expansion and more consolidation. This is very weird. Like this market is very, very weird. See how much consolidation it gets into after every single move. So we have this exponential move. Look at this extended consolidation. Then a little bit up extended move, then consolidation, then a bit more up expansion, but then look at this consolidation. And you can look into this, like this in general is a whole consolidation. We have this consolidation, we have this consolidation. So it's basically consolidating a lot. Yep. Once it goes hard, then it's like super explosive. But the thing is that once it gets into consolidation, like we can expect it to be at least like a month. Okay, like it's very sane to say that we can have a month of consolidation. Like look at this. This one lasted 30 days, and this one lasted 60 days. This one this one is 50 days, and then if you look into this one, it's 90 days, and this one is literally 200 days. Well, okay. So I think we have enough people. We or maybe I'm just gonna wait 1 more minute. Hi, I don't know how to pronounce your name. Like, Radule or Radule, I don't know. But hello, good afternoon. I'm just gonna go into a much more cleaner chart because I have a lot of I was back testing a little on TradingView. So there's a lot of stuff on this one. So I'm just gonna move to another one. Okay. Well, I think I'll start with indices first, and then we can move on to other markets. Well, okay. Also, if you guys have any chart requests, you can ask me in the chat. I'll actually review it for you. Well, so last week, if you had watched my live stream, you would have known that I was bearish on the markets, but I was totally wrong. And now it seems like we are going higher, in my opinion, because I just read the order flow. Now, here's the thing. Now, I was wrong on the markets. Okay, I thought it's going lower, yet I made money on it, and I secured another payout trading NQ, even though my bias was wrong. So this doesn't really matter. It's just an idea, and you have to look for other confirmations as well. Like here, I can say market is gonna go higher, or market is gonna go lower, but the thing that matters is actually the low time frame structure, like the 1 hour, the 4 hour chart. So if the 4 hour chart tells me that it's going higher, I'm gonna look for longs rather than looking for shorts. So that's how it is for me, and I think that's the best way to approach it. Now here, what I see is that we are inside this IRL right now, and it's Monday as well. And usually, when Mondays move lower, we can anticipate that it's forming an open low high close, a weekly power up tree. So open, form the low on Monday or Tuesday, and then expand higher. So this is what I'm expecting, and seems pretty logical to expect that because we have this, you can say, market structure shift, right? And we were at a key level, and now it's at internal range liquidity. So let's see how the market reacts from this fair value gap. We can see a wick into this one as well, very possible maybe tomorrow or on Wednesday. But yeah, I'll see how the market reacts from these two levels. Now, not interested in anything today because it's Monday, and when Mondays have no red folder news, I just avoid it because most of the time it's just going to be consolidations. Well, yeah, so the target is basically this high here. Yeah, and this is what I'm expecting to be taken out. And I'm glad I didn't take any trade today, as I shouldn't have. Like, I was just following my plan. Usually, if I had seen something like this, like a move lower at 9:30 a.m., I would have went long here. Like, it's a simple long for me, an easy one. But since it was Monday, I didn't actually took this long because I knew price is not going to expand. On Mondays, what happens is that when there is no news, price is gonna open, run one side, run another side, again and again. It's gonna be in compression, like a consolidation, and it's just gonna be a small range day, okay, a very small candle, and then it's gonna close. And in this right here, a lot of people are gonna get liquidated. This is where most of the people blow their accounts because there is no direction to the market. So people are going to say, oh, this is a long. Once they go long and get stopped out, oh, it seems like this is going lower, so they're going to short it. So maybe sometimes it's going to work, it's going to go there, but most of the time people marry their bias and they're going to be like, oh, price took this low, it reacted off from here, let me enter another long here and target higher prices, and then eventually they're just gonna blow their account out. I know some of you can actually relate to it, and it's pretty. I think everyone has done it, literally everyone. Okay, so yeah, this is what you want to avoid. Let's check oil. So I was looking into oil, and I saw a clean ERL to IRL, but the problem is that it was Monday again, so I just avoided it. Otherwise, I would have got some longs in here, like easy longs here. If I go into the NY session, I can easily see along. Okay, so here is red on the low, right? There is a fair value gap. And if I go to the 5 minute chart, you can see an anticipated ITL here and would target higher price as well. This is hindsight, so just forget it. But yeah, now let's see. I think we have liquidity below these equal lows, right? So I think price is going lower. I expect price to move lower from this IRL. So it's gonna be an IRL to ERL cycle now. Oh shit, I never get this tool right. Okay, so this is what I'm expecting from US oil, right? So let's see what happens. We are still in bullish 1 hour order flow. Would love to see a close below this low here or this candle's body, and then that will be a short trigger for me. I avoided EU as well, but if we look into it, I'm not really bearish here. Now you guys can say that why would the price go higher on Monday if it wants to go higher for the rest of the week as well. But sometimes shit happens. This kind of thing happens. So I think price is still going higher because just because of weekly profile, I'm not gonna change my bias or something here. So I still expect higher prices. We are at this internal range liquidity. You can see here, and the price reacted or reacted off from it. And same is the thing with Euro USD. So I think it's pretty bullish, and it makes no sense to actually be bearish on this pair. So yeah, let me know what you guys think about it. Please tell time frame to top down analysis. Now, the way I do top down analysis is by weekly, daily, and yeah, that's for that. That's like that is pretty much it for me. Then for executions, like this is just for like the daily, weekly, and for this is just for like my weekly outlooks and what I expect from the week, because these two time frames, especially like the weekly and the daily chart, it's going to tell you a lot about what the week might do. Sometimes I go into the monthly chart as well, but that's pretty rare, and it's not something very necessary. But for executions, I make sure that I'm in line with the H1 order flow, and I'm in line with the M15 order flow as well, because if I want to short and the M15 is bullish, even though it doesn't matter if price is if, I don't know what did I say. Okay, if I want to long on the 1 minute chart and the M15 is bearish, so it doesn't matter if the daily, weekly, or monthly is bullish. If M15 is bearish, then my M1 buy setup is gonna fail, very likely. JPY, yeah, sure. Also, I would like to tell you about my mentorship that I'm currently running. Okay, I'm checking registrations till Friday, and it's a free mentorship. Okay, I'm not charging you money. However, you have to do just one thing. In the description, there is a link. The link will be given to Simple Effects Broker. So it's a broker that is there from like 10 years. So you just have to deposit $2,200, and then you can withdraw it whenever you want. Okay. So in that way, you get a free mentorship. I get to secure my partnership, and it's a win-win situation for both of us. You are not losing money. You are not giving me any money. Instead, literally the broker is sponsoring this mentorship. So if you are interested, and if you are interested in learning from me, how I got funded, how I got profitable, what's my model, how I get bias, everything in complete details, then you can check that out. But yeah, do not um, Friday is the last day to register, because from the next week I will start the live streams, and the mentorship is going to be in live stream. So I'll be there live with you, so you can ask me questions and stuff. All right, Mr. Vios, Mrs. Vios, sorry, will be there. Yeah, let's go to JPY pairs. Your JPY, and Give me one moment. Let me update the description a little bit because I want to add the Discord link. Just a moment. Okay. So the Discord is link is also updated. Check that out if you want to hang out with me and ask me questions. Okay, JPY. I'll go to JPY. I'll start with the JPY futures because that is gonna pretty much give us an idea about what the market might want to do. I think this chart is pretty bullish, and because if you look into it, the order flow on the weekly chart is clearly bullish, right? And we have this buy side liquidity here, so it's very sensible to expect price to go towards this high. And the daily chart is also bullish, like we have this intermediate term low here, and this suggests bullishness. So this is JPY futures. That means that Euro JPY, CAD JPY, and all those charts are gonna be bearish. So you can expect low prices on all of these pairs. Okay. For example, this one you can expect like lower prices on this thing, maybe this low here. But the thing is, the one only problem with this is that Euro is stronger, and J, G, GBP is sorry, yeah, JPY is also stronger. So this can lead into consolidation. So rather, uh, trade CAD JPY or trade Euro JPY when you think Euro is bearish. Bro, I take trade after short-term high, and when it breaks the recent low enter, it gives me. Well, the thing is that there are some times that you have to trade and sometimes that you don't have to trade. There comes the importance of news and all that stuff. Okay, and then there comes the session timings. There comes different kind of like profiles are like open, high, low, close things. So you kind of have to keep those things in mind as well. To be honest, like it's not some kind of holy grail. You have to be in line with other things. Like for me, when I enter, I want if I want to like get into an M1 short or long, okay, so I want price to be inside at least an H1 fair value gap, or it should take at least an M15 low or high before I enter into a long or short. So kind of have to take those middle time frames into considerations as well, or else they are gonna fail because they are formed everywhere, but it doesn't mean you are gonna take every single one of them. But yeah, I'm gonna cover that in the mentorship in very detail, and you will know. And by the way, I've just explained the mentorship is completely free. I'll add the link there, so you will check out, you will see the details of the mentorship. Let me just update the description so I don't have to repeat it. Okay, so in the description I just added a link to my Twitter, and you can check that out. My chart colors. Okay, by the way, I just got to know that I can just do this, copy this, and then paste it here. You can just click on this and you can just get my whole chart thing. So all you have to do is to click on this thing, and above there's gonna be some duplicate button or copy button, and you just have to click that and save that template. Let's look into cryptos. Also, I'm new using these new concepts, so I'm gonna give like analysis based on ICT concepts as well, and analysis according to the volume trading as well. Well, okay, so if you ask me from ICT point of view, it's bullish, like we are in uptrend. We are inside this monthly fair value gap, and this is one of the reason why I don't trade IRL to ERL. Some people ask me, why don't you suggest IRL to ERL? And this is the reason, like you can get trapped in IRLs for like a lot of time, a lot of time. So yeah, that's why I just don't. But if you traded ERL to IRL, this would be your trade from here to here, and you are done with it in one candle. However, if you are trading IRL to ERL, then that's gonna take it's gonna take ages sometimes. Uh, Thoughts on gold? I'll go over that. Do you use ICT? Yes, I do use ICT 100%, but on crypto, I've been recently learning the volume profile stuff. So I can't say I can trade with it, but I'm trying to learn because that thing I found out that that thing is really helpful in cryptos. Well, okay, so from ICT point of view, this thing is pretty bullish, and I don't want to see this low being taken out again. If this happens, then it's probably over. It's probably going lower, man. Like maybe here or at this low, very possible. But I don't want to see this low being taken out. If it wants to go higher, I would expect. And I don't want to see a close below this down up close candle as well. I would love to see a wick and then expansion higher. So this is my thoughts, and we are pretty much range bound here. If you take a look into this, this is a simple range, and range highs, deviation, range lows, deviation. We test up this range low, and then we saw price going higher. It's at the mid of this range. So let's see how it goes. Your chart color settings. So I just shared this thing here, this link here. Click on that, and you are gonna get my whole chart colors and everything. You just have to copy them, and then from here you can select it. Once you copy them, you're gonna see the name there. So yeah, but still, if you want the chart colors here, there we go. I'll enter it here. This is for the green, and the opacity is 74%, and for the black, the opacity is 64%. Now if I have to review this in terms of volume thing, then this is our range, this is our volume profile, and this is called the value area low. Okay, and we saw some reaction from this big range value area low. Now this is very bearish, okay, in terms of these concepts. This is bearish, and we don't want to see. Rather, if it was bullish, we would want to see a close above and a reclaim of this value area low. And if we look into this range, inside this big range, we are close to the value area low of this range. So it's very possible that we retest this value area low, and we can expect price to go higher from there. But if it doesn't happen and this fails to be reclaimed, then price is most likely going lower to this low and then finally this low. So yeah, whatever. Let's go to gold and see what's up with it. I've said it many times before as well, but when price is at all-time highs, um, it kind of becomes low probable for me, because I don't know where it might retrace or something. But if from what I can see is that I see this fair value gap here, and where it's very possible that we form a fair value gap here. So since the chart is bullish, I'll just expect price to maybe tomorrow tap this low and go higher from there, or maybe tap this low, I mean this fair value gap, and go higher from there. But I honestly can't say anything about it, because look into this. This is just an uptrend, and price is making simple highs. Like look into this. Like you can't really know if it's going to retrace or not. So something I'm not really sure of, and I've said it like multiple times. You're meant swing talk about auto blocks. Auto blocks, I personally don't use them. I can't trade. I just came affiliate. Okay. I fake payouts as well, and you are actually getting blocked. I don't know why some such people exist. Like I literally trade in front of everyone. I post my trades beforehand. I took a challenge account from literally P1 to payouts live in front of everyone, and yet these guys have to say things like this. Well, who cares? Okay, back to the auto blocks things, and I actually do not use auto blocks to be honest, so I can't really say. For me, what matters is the fair value gaps. That is enough for me. Yep. So, and I think that's how the market book go to one fair value gap, then go to high or low, then go to another fair value gap, then high, low. ERL, IRL, ERL, IRL. I think that's how the market works. Can you do your yes, I'll do. Your mentorship, it's not gonna be on YouTube, it's gonna be on Discord. And if you check the description, uh I've given a link to on all of the details so you can check it out. Your CHF. Also, one thing I don't understand about people is that if, let's say, I couldn't trade, would I even dare to start a public challenge? Like, it's just common sense, man. Like, if I couldn't trade, do you think I would just hurt my publicity or my popularity and trade in front of people? Like, some people are so sick, man. Like, sometimes it makes you sad. I struck out this major low and it is reacting off from this here, this rejection block, and we have fair value gap above. So I think maybe we go to this fair value gap and then reject from there because we're kind of gravitating towards that. Yeah, they are actually attention seekers. Would you happen to have a day trading approach, something mechanically that I can set for all analysis and yes, I have like my whole model is kind of like that. It's kind of like that. I since I trade on the 1 minute chart, right? So, you know, with my trading model, I think on different pairs, if you see like let's say your USD and NQ or GBP USD, if you monitor them during the sessions, you will find out at least 2 to 3 setups on all of these pairs a day. But I don't like to trade more than one a day. Sometimes I look into the risk and how much I have risk per trade. So sometimes I take 2 trades, but I don't like to go anything above that because it leads to over trading, revenge trading, and whatnot shit. Mm. The mentorship videos there are going to be, I will record them, but they are going to be exclusive to those who join who join it on my Discord. But it won't be like given to everyone. Okay, so yeah, your CHF, it's I think going higher, very possibly. It's moving higher towards this high at least. But the reason I don't trade these pairs is because it has some real bad spreads like 1.5 pips and 1 pip spread. It's kind of a lot, and I'm a scalper, so imagine taking a position on the 1 minute chart and having to put 1 pip buffer for the stop loss. That kind of ruins the whole risk to reward ratio for me. But I can see a pretty clear market maker buy model here. By the way, in the mentorship, I'm gonna go over all these things: the market maker buy models, structure, auto flow, every single thing that I know. And by the way, it's actually not my first time doing a mentorship. Last year, I had a mentorship, and I got a lot of people successful from it. But this time it's free. Let me know if you guys have any other chart requests or any other questions regarding my model or anything. I'll answer, and make sure to join the Discord. Link is given in the description. That's where I'm really active, and I have made a new Discord. So if you are in the old one, kindly just get the fuck out of that because I'm no longer active there. It's kind of useless because it's very inactive, and I tried my best to revive that shit, but I couldn't. So I just decided to start it over completely. Is it okay to just wait for daily H4, weekly FEG or liquidity sweep, and go to M1 and M15, wait for red and MSS and M1 on your model? Yes, liquidity sweeps on daily H4 or H1 or weekly. They're pretty fine. Like, and indeed they are much better than even fair value gaps. Like sweeps, they are better than fair value gaps. Okay, so for example, if you take a look into this sweep here, this is the daily chart. This sweep happens here. We are still in a bullish order flow, right? The higher time frame is bullish, and price closes above. Look at the expansion afterwards. So you can just go to the low time frame and position yourself here in the low time frame charts. So that's also one way I trade. Like it doesn't necessarily have to, like the daily or the weekly chart doesn't necessarily have to be inside a fair value gap or something. It can just take out a low or a high, and with the low time frame confirmation, I'll just go long or short on it. I don't have to. I think it's better. The less the trades, the better it is. So I think for you, what you should do is that you should stick with like the M15 chart, because you should just have like make a checklist, sorry, a watch list like me, the way I'm doing right now. Just make that, monitor them over the week. Do not rush anything. Wait for your setup, and then just all you have to do is to just execute using the same logic on the M15 chart. Make sure it's your highest probable trade, like your A plus plus trade. Everything is in line. The power up three, the weekly power up three, and the news is etc. You're gonna make shitload of money. I do shit ton of trades, whichever I see how to avoid. Well, I've talked about it like many times, but you can't really, like, I can't help it to be honest. It's something that you have to go through to stop. Yeah, like you are at that stage where you're most probably either a beginner or an intermediate level student. You have to go through that, and once you stumble, you fall. Okay, you lose money, you lose accounts, you are gonna have that clarity then that you shouldn't do this, you shouldn't do that. One more thing that I'll suggest is to journal. Journaling is really helpful. I'll suggest that. But apart from that, it can't really be helped, to be honest. Like, you just have to go through it to overcome it. There is no way. Like, I can give you a motivation speak right here, but that won't work. It doesn't work. Okay, you just have to go through it. My model, I have a very detailed video on it on my YouTube. Check that out. And if you still are confused, then I can't explain it right now because it's a bit too detailed. I will do it in the mentorship probably. And if you don't know what I'm going to go through in this mentorship, this is basically the content. So let me just break it down for you and why it's planned in this way. So first we start with the basics of ICT, like states up the market, OHLCs, NOLHCs, liquidity pools. Okay, these are like pretty important to get your base. Then we have the intermediate stuff, which includes order flow and high time frame order flow, and then the retracements that happens in the low time frame. Then how market generates liquidity, then the IRL and ERL stuff, then the advanced market structure. Then comes the advanced things like MMXM and time frame alignments. They should be in the intermediate though. How to catch expansion, the entry patterns, and then combining all these things together to form a model. And then finally, some systematic models. Okay, my main model that I use, then the Asian low or high model, which I have explained, but I can go into more details of it. And the previous day's highs and low model. This is basically what I'm going to teach you. And it's just a one time thing, to be honest. Like, I don't know how my university schedule might be in the next semester. So I won't really be able to do it maybe till next year or maybe never. Who knows? So it's like your chance to get into it and learn from me if you want to. Yeah. So if you guys have like any further questions, just let me know. If you don't, I'm just gonna end this stream. And do join the Discord. Link is given in the description. I'm active there and I post my analysis and trades, etc. there. But yeah, if no questions, then I'll say goodbye. I'll wait like a minute or so. It will be weekly, like I'll do either 2 or 3 streams per week, and I will cover it in those streams, like every single thing. You have to, for the mentorship, you have to deposit $200 into Simple Effects. Link is given in description of Simple Effects, and you can withdraw them out, okay, whenever you want. So all you have to do is to just deposit it and then withdraw it. I don't care. Just deposit and withdraw and send me the proofs on Discord. And everything's link is given in the description. So yeah, that's how you join the mentorship. Well, yeah, so I think there aren't any further questions. Goodbye, everyone. Thanks for joining. And if you still have any questions, just join the Discord and ask there. Thank you.